Hello, friends, and welcome back to another episode of the Market Stretch here with your host, yours truly, Max Drew CPA. And today we're going to take a look at what's been happening in the markets over the last week. So starting this a little bit later than usual, so I hope it gets out by Sunday, if not late Saturday, but it's 4 a.m. Saturday morning, getting out the market stretch as we check out what I like to call the yoga of investing. And what that means is just once a week, we take a look at the three major indexes, as I like to call them, three U.S. indexes that I watch. And we like to take a 1 day, 1 week, 1 month, 6 months, and 1 year look at the Dow Jones Industrial Average, which is the oldest of the indexes that I like to keep an eye on. The S&P 500, which is probably the best known index in America currently, started out in about 1957. And then the Nasdaq 100, which the Nasdaq is actually the second largest stock exchange in the United States, second to the New York Stock Exchange. And the Nasdaq 100 is an index term that they came up with in about 1984, which talks about the largest 100 stocks in the stock market on the Nasdaq listed, but only the non-financial stocks. So it's usually considered to have a little bit more of a tech flavor. All right, so let's go ahead and take a look at how things have gone over the last 1 month or 1 day in the stock market. In the Dow, the last 1 day, the stock market was up an amazing 0.025%. I don't know if it's really that amazing. If you had $100 in the market, that means you would be up about 2.5 cents. Okay, I don't even know if you can even buy anything with 2.5 cents anymore. But anyway, that's where it is for the last day. Now, over the last 5 days, it's up 0.39 cents. So you almost made 40 cents on that $100. In the last 1 month, it was up 2.95%, $2.95. Okay, we could almost get a cup of Starbucks coffee for that. Probably could get maybe a coffee if you had $100 in the market and you grew up to $2.95 and you wanted to take out those amazing earnings and spend it on something, you could do it that way. Last 6 months in the market, $4.73 or 4.73. So if you had $100 in the market, you'd be up $4.73. When we look at the 1 year, it was up an amazing 20.27%. Now, remember, a lot of times people are looking for about 8% on average growth. So at this rate, we would say the Dow Jones did about 2.5 years worth of growth over the last 1 year. So hopefully your portfolio is keeping up with this amazing growth that we've been having. If not, you might feel free to hit me up for a free review of your portfolio, and we could maybe check out to see what is different with your investments that could possibly be improved. All right, let's go ahead and take a look at the S&P 500. The S&P 500, now remember the Dow is 30 big blue chip stocks. The S&P 500 is how many different stocks? Okay, if you guessed 500, you're right on the money. So it's the 500 largest publicly traded stocks in the United States stock market. And we're going to take a look at the 1 day. Now, the 1 day is actually up 0.84. So if you had $100 in the market today, you would have made 84 cents. Now, let's take a look at the 5 day. 5 day in the market, up 2.36%. Not too bad. If you were up for 1 month, you'd be up 8.41%. So if you had $100 in the market over last month, you're up $8.41. All right, getting close to being able to buy like half a movie ticket. Okay, seems like $8 doesn't buy as much as it used to, but maybe that could go towards one of your online subscriptions or something like that. I'm not sure how much Netflix costs nowadays. All right, well, let's take a look at the next one. 6 months in the market. 6 months in the market, you would have made about the same as the 1 month, only 8.29%. So that means 6 months ago, the market was about the same place it was 1 month ago. So it had some ups and downs. Over the 1 year, the S&P 500 has performed an incredible 30.73%. Now remember, if we're using that 8% rule, you might say, hey, you know what? We've actually done about almost 4 years of interest, because 4 times 8 would be 32. 3 times 8 would be 24. So we're actually almost at 31%. So we almost done about 4 years worth of appreciation, or expected appreciation, in just the 1 year. So hopefully you've had some good participation in that in your stock portfolio. Now, the next one we're going to look at is the Nasdaq 100. Okay, Nasdaq 100 for the 1 day, it's actually up 2.35%. For the 5 day, it's actually up 5.42%. Not too bad, averaging about 1% a day. Just imagine if it could do that for a whole year, you'd be up 360%. Well, it's probably not going to be up every single day, because one thing we know about investing, and especially investing in the stock market, some days you're going to make money, other days you're definitely going to lose money. But overall, the stock market has a history of appreciating, and typically it's considered to be a good place to keep your money if you want to grow it, if you want to keep pace with inflation or outpace it. But that's a little bit more detailed conversation that we're going to have today, and we're going to take a look at the 1 month. The market is up 16.56%. Whoa, pretty good. You could actually go and see a movie for that much, I believe. If you had $100 in the market, you would have made $16.56 over the 6 months. Oh, actually up a little bit less than 6 months ago. So 14.15. So that means 6 months ago, the market was a little bit lower than it was 1 month ago. All right. Well, let's see how it did in the 1 year. Do you think it performed better or worse than the Dow or the S&P 500? Let's take a look. In the 1 year, up an amazing 45.73%. All right. Well, sometimes it's hard to believe this kind of growth. That would be at 8%. That would be close to 6 years worth of growth. So remember, it's not always timing the market, but it's time in the market that will make it up for the growth over time. And if you've been in the market this last year and tracking the indexes, you should be very happy, making anywhere from 20 to 45, 46% almost, just in tracking these indexes. So I hope that your investments are doing well. Of course, remember, folks, we've been in a 17-year bull market. I understand it's the second longest bull market in history. And could we be on the verge of a collapse? Could we be in a bubble? Remember, there was the dot-com bubble way back in the day, and the markets went down about 50%, even more than 50%, and they stayed down for a long time, over a decade. Could that happen today? Are we on some kind of a bubble? Well, some people say we might be on an AI bubble. Okay, who am I to know? If I was more psychic, I probably wouldn't need to be working. But as it is, I still have to keep working for a living. Okay, so I like to talk about the traditional wisdom of the markets. What's been driving the markets this week? Well, this week, it seems like there's been a lot of mergers and acquisitions going on in the markets. One thing I heard is GameStop was actually trying to acquire eBay and wants to make that a new source of, competing with places like Amazon. So we'll see what happens with that. A lot of money went into that bid. Another interesting turn of events, I understand that Amazon might start competing with FedEx and UPS and USPS, as they're going to start using some of their infrastructure to offer some sort of shipping. So that'll be interesting to see how that turns out. So we do have different things going on. Of course, the conflict in Iran with the Strait of Hormuz, we're going into about day 71, and I'm not quite sure what's going on there. It seems like there have been some shots fired recently, but the U.S. is still holding strong and seems to be in control of the situation from what I could hear or understand from the news reports that I watch. So I think they're just trying to time it. They're thinking eventually the regime and the people are going to run out of resources, and they're going to be forced to take the deal that the U.S. most favors. So we'll see how that turns out. Of course, the Strait of Hormuz cutting off right now 50% of the world's oil supply. Nations such as China being most heavily affected by this, but also places like California, since California has not developed oil independence because of all the regulations. We do have to have our oil shipped from other places here, and it's actually causing more stress on California, I believe, than other states. So we'll keep an eye on what happens with that. Despite that seemingly harsh news, stock market has been performing gangbusters. So it's been pretty amazing what we've been seeing in the markets in spite of that type of news. Okay, another thing that happened recently for all you conspiracy theorists and things like that, the US did release, the Department of War did release the UFO files. Well, I haven't looked through too much of it before. I think there's one that is very exciting that a lot of people are looking at, which maybe other people are calling it different things. It looks almost like a sundial or something like that to me, or like a, one of those things that shows like north, south, west, things like that. But if you're interested in those types of things and you want officially declassified U.S. documents about, I think they're calling it identified aerial phenomenon, UAP, then you can check that one out also. So that's the part of Truth is Stranger Than Fiction this week. Lots of other news in there. If you want to check out what's driving the markets, go ahead and take a look at the market news, do some digging. But today I just wanted to give you your basic yoga, an easy stretch into the indexes to see how our money's been performing last 1 day, 5 days, 1 month, 6 months, and 1 year. So I hope you're participating in the markets and I hope your investments are growing solidly. However, is following the index the be-all end-all of investing? Well, I don't think so. And why? Because when the markets crash and crash hard and they stay down for extended periods of time, occasionally that could put you in a 10-year spiral where you don't want to be. So there are other ways to invest, but starting out with understanding the indexes, I believe, is a very good way to start your financial understanding. So if you're looking to learn more, or you might need a tax advice or a financial advisor, feel free to contact me, Max Drew, your friendly neighborhood CPA coming out of Sacramento, California. Looking forward to seeing you next week in the next one. Hoping you have a great rest of your week, and I hope that this month is going to be looking up for you. Look forward to seeing you next week. Take care. Bye-bye.
Follow, message us, or scan the QR code on the screen to learn more.